So, Krista, what are your reflections on Climate Week so far?
Thanks for the question, Louis, and good to be here. I think so far I've been sort of positively surprised by how uplifting the mood is, despite all of the headwinds around climate and ESG and sustainability work, especially in the financial services industry. A lot of the events that I've gone to are still the kind of overall headline message from the folks that we work with predominantly has been to continue doing effectively the same work that they've been doing so far, but just talking about it maybe a little bit less publicly. So that has some interesting implications, but it doesn't mean that the work isn't happening, which is great. And it feels energizing to be here. So that's always good.
And what are the key themes, trends, concerns that you're hearing from the panels you've been on, from the networking events you've attended?
Well, in a way that sort of, business as usual, but don't talk about it is one key concern, which is to say, how do we build business as a bank or an asset manager around this if we can't really advertise our offerings? And then the other side of that is, especially for the asset managers that we work with, there's just a lot less happening in the US and generally North American market on things like green bonds or even sort of finding green equity investment opportunities and so on, whether that's across mitigation or the broader A&R themes and other things as well. So there's it feels like there's a bit of a moment of trying to work out where to put more resources. And most people are then looking at sort of Europe and Asia Pacific and other regions to try to lead the way a little bit. And the other thing I'm seeing, which I'm sure you've heard and will hear from other podcast guests and in the events that you're going to, is resilience is on everybody's lips this year, which is great. I'm very happy to see that. I think the other kind of element of not being able to call things in the same nomenclature that we were used to calling them is that there need to be new terms that evolve and that emerge out of the woodwork. And definitely resilience in its broadest sense is one that I'm hearing a lot in both looking at climate resilience, but also social and societal resilience around those topics. And then definitely still energy and the energy transition, which is, I think, always continuing to be pertinent to the US market in particular. So we're kind of trying to work around maybe that type of wording and labeling rather than calling things green or sustainable or ESG.
Yes, I'm in two minds about the use of language here because on the one hand, I think it's right. If we can use a different language and still do what we're doing in terms of adapting our economies, pushing forward the climate transition, that's great. But I am a bit worried that by kind of disassociating language of climate from adaptation, resilience, we're kind of allowing ourselves to forget the bigger picture. Like, well, the best way to adapt is to actually to mitigate climate change, right? To reduce emissions. And talking about extreme weather risk is all well and good, but actually, if we don't know what's driving extreme weather, not being open about the effects of climate change on extreme weather events, then we're kind of missing part of the picture there. So I'm in two minds about that. Maybe because as a journalist, I like to use the language which actually explains what's going on rather than the language that we're comfortable using. So I'm still kind of in my own head trying to figure out how I feel about that.
Yeah, I'm kind of with you there. I think there's it would just remove a lot of the inefficiency if we could talk about the terminology as the terminology. But I also empathize with the folks that are trying to, push forward with the good work that they've been doing here, especially in the US market and maybe broadly North America, to have to sort of live within the constraints of what the system looks like right now. And hopefully that will get better over time. I will say, though, that yesterday night I was at an event organized by a large institutional investor, and they were saying effectively that they're finding that the usual names that they invest in are continuing to push forward on their efforts to both mitigate and adapt to the impacts of climate change. They're just the labeling and the kind of how you communicate around it looks different. So I think that emphasizes even further the need for, it doesn't have to happen at Climate Week, but, just kind of bilateral engagement, like people talking to people and figuring out what's going on is kind of quite valuable in this rather than losing hope by looking at the bad news stories in the media all the time.
There's been right and there's been effective, and being effective right now maybe, yes, using different language, keeping your head down, but continue to do the work. So I'm in favor of that. Okay, now I want to turn to ClimateAligned, your company. Can you tell us where it started, how it started, and where you fit in the crowded AI space?
Oh, yes, absolutely. My favorite topic. So we started in late 2022. And before starting ClimateAligned, I'm obviously one of the two co-founders. I have spent close to a decade in sustainable finance in different roles. And immediately preceding, I was leading up what we called the market intelligence team at an NGO called the Climate Bonds Initiative. So standard setter for the green bonds and broader sort of fixed income for climate solutions space. And it was really there that I became and still am convinced that we're sort of in a moment of some futile efforts around trying to standardize things. And that means that we are, it's really complicated for investors and bankers and issuers in the middle to try to get and provide the information that they need to make decisions effectively, because everybody has a slightly different view on what sustainability or green or transition or climate adaptation investment means. So the usual flow of information is something like, an analyst goes to insert your favorite search platform, or it goes to internal file systems and finds a couple of PDFs, maybe some spreadsheets, maybe looks at a couple of websites and tries to sort of by hand pattern match information to their internal set of rules, maybe some policy guidelines, and extract that information and put it often into a spreadsheet or into a slide deck so that can then inform an investment decision, either for a new security or something that they already own or would like to own and then have to report back on. And so we set out to automate that flow. And we've now been building this for 3 years. We have effectively a platform that consists of a couple of different products. One is for the labeled bond market, so green, social, sustainability, all the various flavors. And then a couple of other things. So one is a self-serve sustainability assessment platform that we've just launched this summer called brief.green, which is being used by everybody from journalists to academia to NGOs, effectively folks that are already active users of AI in this space, but cannot necessarily afford to spin up those capabilities that will scale and continue to be accurate and sort of repeatable internally, just for cost reasons. And then we also do custom data deliveries. Often if there's a specific market segment. For example, we just worked with a large multilateral development bank doing a very bespoke transition pathway analysis and mapping oil and gas companies in the Middle Eastern and North African markets to look at how well they're doing and how well or closely they would align to some of the guidelines that are out there in the market for issuing sustainable finance instruments. So all of this to say, our job, as we see it, is to bring down the cost of total ownership of data in this space. So really try to push for the democratization angle, because a lot of this is public information. So trying to bring it together in a way that people can access and use it in the right way. And then B, to offer this customization at scale. So we can, and I think we should, have differing opinions about how these transformations in our economies are going to shake out in light of climate and other mega trends, if you will. So we try to offer that at speed and low cost using AI.
So how are you and how are your clients using your tools to understand adaptation better in the finance space?
Yeah, that's a good question. So there's a couple of ways. Maybe I'll start with the fixed income side. So these are big institutional investors, sometimes also the banks that try to help bring more of these to the market. The way that we've set up that side of, or that product in particular, the ClimateAligned app, as we call it, is we've collected now, I think, close to 100,000 documents related to sustainable bonds into one place. And then we've run hundreds of different AI pipelines across those documents to extract and process relevant information out of them. And that happens at the point of something coming to market. That could also be in the case of, an equity investment, or it could be for a government bond. So looking at the sort of right set of documents, extracting the right or relevant information from it, and then making that available on an ongoing basis, including when the issuer of the bond, so company, country, city, otherwise, will start to report on what they've actually spent the money on. And we kind of map to some of the categories that some of these market makers like ICMA, the International Capital Markets Association, will specify that something is, adaptation at the high level. But then we also offer the project level detail and the sort of impact performance metrics that issuers choose to report. And because we've made the platform tried to make it as flexible as we can, you can search through it and actually see examples of all the way down to the project level of what is being financed. And this is definitely, we're actually in conversation with a US asset manager right now about them using this data to try to see if they can create an adaptation-focused fixed income fund.
Ooh, cool.
In public markets. It's brand new and it's early days, but this is the kind of thing that I'm hoping to see much more of. And then on the bank side, it's obviously using the same base data of what has happened in the past and what's constantly happening. We update the data every week to help guide customers that they help to bring new bonds to market to say, well, these are the kinds of examples of A&R projects that have been financed by, let's say, similar entities or in similar markets, and then make sure that they're doing kind of what they can to meet the very quickly and rapidly evolving best practice guidance around adaptation.
Yes, I really like how you study the documentation of a green bond, but then track afterwards as well. So there's sometimes a mismatch, and sometimes it's not very clear from the language of a bond prospectus, and definitely not clear from the marketing language around bonds. I found what the money's actually going towards, and actually being able to do that auditability, that tracing is so important and very, very helpful for journalists like myself, but I suppose also, yes, for indeed asset managers and people who are corporates that are trying to issue bonds themselves that kind of align with these themes of adaptation, resilience, mitigation, blue economy, whatever you want to call it. Yeah,
absolutely. Thank you. We agree, and it's exactly that point that you mentioned around a lot of promises get made effectively, and it's not with a negative connotation necessarily. I get it from the point of view of if you're trying to make a sort of investment commitment, and then you're trying to collect all the possible pools of capital or asset types or project types together to have enough investable volume to keep issuing these bonds. You don't really want to tap the market just once and say, I've done the green label one time and I'm going to never do it again. So it's really a sort of transformational thing. So of course you're wanting to collect them or collate them all together, but then in reality often only one or two things get financed with one deal. So it is this sort of reality check that we're trying to offer at very low cost as well to the users, to say, well, this is where the market is actually at, and here's where some of the potential innovation is also based on what is in those frameworks. And then you can engage directly with those issuers, and you can engage with the bankers that help them, and with the investors that are, as per this example of a potential adaptation fund, who are trying to work out, what other kinds of mandates could one create financial products for.
Now, finally, I want to talk about how AI is changing business, changing business models.
Yeah.
I mean, I'm a one-man band, right, with Climate Proof, but I know I wouldn't be able to do what I'm doing without the assistance of AI. I have AI tools to help edit the podcast.
Yeah.
I write everything myself, but I use AI for research, for summarizing, etc. And that gives me more time to do the kind of direct outreach, interviewing people, doing special projects like we're doing together. And one thing I've heard is that with AI, you can build cool products that 5 years ago would have taken teams of dozens of people and millions of dollars. And I actually worked at a climate tech company that did similar to what ClimateAligned does, kind of analysis of documents with AI and kind of taking unstructured data and turning into structured data, right? That's been the big theme of AI. And what 5 years ago, that company I was with raised a bunch of money, had a big team, and now you're doing it at a much lower price point, smaller team. And do you see that being how businesses, startups continue to grow in the future, as in smaller teams, and they can leverage AI to do bigger, better things? Or do you actually see this other side, which is like the large incumbents really skilling up on that AI side and kind of tearing you down? So I think about Bloomberg, the biggest boy in the playground, loads of data, getting very involved in AI, but there still seems to be room for companies like yours. But how do you see the competitive landscape evolving because of AI?
Yeah, I think I'm more definitely, if you look at overall the kind of evolution of AI first companies now, and even in the last, let's say 6 to 12 months, it is clear and very obvious that you can have incredibly outsized outcomes compared to what you could have in the past, like, making your first $1 million in annual revenue, your first 10, 20, whatever, with very, very small teams. So this is definitely going to continue. I don't think anyone would, for just for the sake of it, go and hire a very large team around a product proposition until they really have to. Like a great case study of this is the Swedish vibe coding app company Lovable, which is me too, and it's great and it's fantastic. It's the largest Series A round in the history of startups in Europe. I think it's only still a team of some tens of people, now obviously growing rapidly, but they did this with a very, very small team, and now they're scaling because they're going after enterprise clients. So I think that's going to sort of continue to be the way forward. And with regards to the competitive landscape or the implications of that for our specific competitive landscape, I'm glad to see the incumbents are embracing AI, and it's great. It pushes all of us forward because it helps to build trust among the shared potential client base and the existing client base. I do still think that we have the usual innovators dilemma, large company issues where we're hearing from the larger data providers in this space, and especially the kind of just not tech companies, but data providers specifically, and service providers, that most of their time right now is still being used on figuring out what data they even have and what goes where, and kind of trying to figure out how the nuts and bolts all fit together. And then you can start to really use this technology on top of that. Whereas with specialists like us, and there's many more amazing companies out there doing similar things and sort of adjacent things, I think, as you say, there is room for these niches to say, I'm going to build one type of offering or one data set or one specific service for a very specific use case first really well. And then the sort of big uncertainty after that is what happens next. So I think for us right now, we're really focused on making sure that we can keep our pricing super competitive and really live up to that sort of thesis of democratizing access to the information, but also honing in on what I think will be the foundation of any startup moat in the future, which is distribution and community. Because the tech gets so commoditized and so easy to build, it's still hard, but it's not that hard. You really, as you said, you need a team of 2 to 10 people who are very skilled and some really good engineers to make it work, and pretty much anybody can then do it. So how you're going to win, in my opinion, is making sure that you're really fostering, not just keeping existing customers happy. Everybody wants to do that, but really trying to understand, like, what does your funnel look like? How do you get these products into the hands of people faster? And don't let yourself be disillusioned by the conventional sort of SaaS long sales cycles in finance in particular. So we're starting to see some really interesting movement around that front, and hence obviously the launch of brief.green, for example.
Yes, I really like your approach. It is different from what others are doing, and it kind of challenges like the status quo in SaaS. But for me as a user, I think it's great that I can very quickly sign up. It's very cheap at the moment, but I'm getting great results from it. And when it comes to distribution, yes, I can quickly use your data to put together reports, articles, etc., data products of my own, and put them out there. And that's good for you, that's good for me. And I think it helps to show the real value of AI, which sometimes people are still not entirely sure about.
Yeah.
But I think we can show the value by collaborating together, using your tools, my knowledge, and other companies doing the same.
Absolutely.
So really excited to be working with you, Krista. Thank you so much for coming in today.
Thank you for having me.